Hi, everyone. I am Morgan Boudreaux, Vice President at Business by the Book. April is Financial Literacy Awareness Month, and today I am here to walk you through the key takeaways from your financial reports. As always, Business by the Book is here to take the stress, confusion, and worry of financial-related tasks off of your to-do list so that you can focus on what you love to do, which is design. At Business by the Book, we are here to make managing your finances refreshingly easy. So before we dive right in, I wanted to set the scene and answer some frequently asked questions. What should be in my reports? How often should I get reports? And how do I even know what my reports mean? So what should be in my financial reports or my financial packet? At a minimum, you should receive an updated balance sheet, a profit and loss statement, or an income statement. Those two are the same thing. An accounts receivable report, which are your unpaid invoices or money that your clients owe to you, an accounts payable report, or your unpaid bills, which is money that you owe your vendors. We also send a statement of cash flow, which is really important, and that shows the in and out of your business during a defined period so that you can really understand your business's cash, and that will help answer a lot of questions and fill in the gap between, your profit and loss says that you have a net income of X amount of dollars, but there's only less than that in your checking account. So the statement of cash flow bridges the gap there. How often should I get reports? Most of our clients get their financial packets monthly, and at a minimum, you should be getting financial reports quarterly. If your accountant is not providing you with updated reports on a recurring basis, when you can know that you can expect them, then it might be time to look for a different accountant. This is really important because without these financial reports, you have no idea what's going on. And it's also important that you're reviewing them because you're the only one that really has all the answers to what the transactions mean. And it also helps you make educated financial decisions for your business if you're looking at these reports on a quarterly basis or monthly basis. Recurring basis is really what I meant. And how do I even know what they mean? Well, that's the point of today. So we're going to walk you through some key metrics that you should be looking at, some key figures, and that will hopefully show you exactly what you should look at. And if you ever wanted more help, we definitely can help you, have a better understanding of your financial reports. All right, so we're going to start with the balance sheet. The balance sheet is broken up into three sections: assets, liabilities, and equity. And so in the assets section, that lists your cash, basically. So that's your checking accounts listed, your savings accounts are listed, your accounts receivable are listed. That's money that should be coming to you from your clients, as well as any undeposited funds. And this is the account, the category that we want you to focus on when you're reviewing the asset section of your balance sheet. And this analogy is getting more and more outdated as I use it, but undeposited funds are like the cash drawer of a cash register. So it is where money goes before it has, hit the bank. Where we see funds and undeposited funds, like where we see this happen the most, is when there is an issue between what you have recorded in your project management system, like House Pro, and what actually hits the bank. So that could be a delay, like the check is sitting in your car, on your desk, in the bottom of your purse, or if there was an error, either your client wrote the check wrong and transposed numbers, which happens a lot, or when you entered the when you enter the check into House Pro or Design Files or whatever system you use, you made a typo. And so this will help us align any discrepancies. So when you look at your undeposited funds, you want it to say zero. If it doesn't say zero and you're a Business by the Book client, your account manager should have told you it's just a timing issue. You deposited the check, it's going to clear it cleared on the first of the following month. There's no problem. Or they're going to ask you and draw your attention to it and say, where's this check? Can you double check on this for me? The next section that's important is, so the next section is the liability section. This is everything that you owe to somebody else. So your credit cards are listed here, your sales tax accounts are listed here, any loans are here, as well as your client deposits and retainers. Because until that retainer has been applied to an invoice, it's a liability. You owe it back to the client if you don't uphold your end of the bargain with the product or the service. So it's important that you are taking a look at this, that you realize that you have really not earned this money yet. So we love it when our clients use a separate checking account to keep these funds in. So you would be able to reconcile that deposit account, the trust account, the retainer account, whatever you want to call it, with whatever balance is listed in your liabilities, because that would just make sure that you're not borrowing from Peter to pay Paul. So double check your client retainers and deposits, make sure that that matches up with what you have on hold or in reserve for your client. So that is really an important account or category to take note of when you're reviewing the liability section of your balance sheet. The final section is the equity section, and so this shows money that has come in or out as equity. And so here is where you're going to find your owner's pay and personal expenses. You'll also see your tax payments here in this section, if that is applicable. And we break this out by year because the balance sheet just builds and builds on top of each other, and it would be really hard to keep up with if we didn't separate it out by year. And so this is what we like to point out here, is that this is what you have taken out of the business as salary or owner's pay. We love it when you use owner's pay. That would be transferring a lump sum from your business checking account to your personal checking account or personal savings account. And like I said, sort of like salary. What we do not like to see is personal expenses. So pay yourself a lump sum and stop buying clothes or tuition or daycare or the babysitter or nails, all of that. Get that out, pay those expenses with your personal checking account, and pay yourself. We want you to pay yourself, but we want you to pay it as a lump sum with a bank transfer out of your business account. So that's what we want you to focus on there. It's how much money that you've taken out of the business. It's really important that you're checking on that. Okay, the next section is the profit and loss statement. This is often, like, our clients will say that this is a lot easier to understand than the balance sheet. You either are going to get, when you look at a P&L, it's going to say what the date range is, like last month or last year or year to date, and it'll be year to date by month. So you'll see like January, February, March, April. Is pretty self-explanatory. The first key takeaway here is your gross profit. Gross profit is revenue minus COGS, and that's how you get to gross profit. And so, or total income minus cost of goods sold. That's the vocabulary that's used here in this slide. And so that is the profit that you've made so far after you've paid for the things that you have to actually, run your business, like the furniture that you're installing in your client's homes. So those are the cost of goods sold. And so that gross profit number is, we like to set targets for that. Like you want to have a, 60% profit margin or whatever. And so we can help you set those KPIs, those metrics, and we can help track those for you. The next key takeaway is the total expenses. It is really easy for this number to just increase. With the cost of subscriptions going up, you start to get really comfortable with buying your team lunch, or you get an office space, or you get a business coach, you hire an accountant, all of those things, and your total expenses just goes up and up and up. And so it's really important that you're monitoring that. It's great to look at that, to check back, what were my total expenses at this time last year, to see how things have crept up or down, so that you can keep an eye there. And then finally, the next there's a last key takeaway is the net income. And so the way that you get to net income is total revenue minus COGS is gross profit, minus expenses is net profit. And so that net profit number, that's your bottom line. That's how much money your business has made for the year, for the month, depending on what the date range is set at for that particular P&L. It's important to realize that that number does not have your owner's pay taken out. And so it's important that you're looking at both of these reports. They are not replacements for each other. They're connected. You have to look at the whole picture. And so I like to remind you that you have to subtract what you've paid yourself out of this net income to get a true, real idea of how your business is doing. So they're connected. You have to manually connect them by reviewing your reports and understanding that they are separate entities. So I hope this was helpful with the 6 key takeaways. If you need more help, we're here. We offer all of these different accounting services that will help, prepare your balance sheet, your profit and loss, everything. So we do that on a recurring basis. And then we also offer a financial analytics program. If you want to dive deeper and have a better understanding of your reports, we can set up accountability meetings. We can review your financial reports with you. We can do some cash flow forecasting if you're interested in, making a big purchase, buying an office space, renovating a space as a showroom, opening up a retail store. The cash flow forecasting is really important there. And then I think I mentioned this earlier, we can do some metric tracking and some KPI tracking to help you track where you are with those goals that you set. And then if you want support with reining it in and getting on a budget and sticking to that, sometimes you just need some accountability. And so we definitely are here to help you. Our financial analytics packages are very, very customizable. So if you're interested in that, please reach out. I'll drop all of our contact info down below. So if you need anything, we are here to help. Thank you so much.